Market's proven to be incredibly resilient during the pandemic. This big trend in the cities of people moving to bigger homes a little further afield. Now you have Toronto starting off pretty strongly for the year. Sales volumes up more than 50% compared to January of 2020. And the local real estate board in Toronto predicting the average price is going to crack $1 million this year. Let's bring in John Pasalis of Realosophy. John, you know the market intimately. When you hear this call from the local real estate board, some people will sniff and say, well, of course, a real estate board says prices are going higher, but you think they might be right on this one?
Yeah, I mean, I don't always agree with them, but yeah, 100% they're right on this one. I mean, all signs are pointing to a market that's only heating up. I mean, the suburban housing market's exploding. Demand for condominiums is through the roof. I mean, we're almost double last year's sales in downtown Toronto. And even though the markets and prices are a little soft for condos, I mean, when sales are doubling each month, it's just a matter of time before we see prices increase for condominiums as well. So, yeah, I think their forecast of rising prices into 2021 is pretty spot on.
Now, when I think back to 2016, 2017, Vancouver first and then Toronto, when we were seeing price gains of over 30% year over year, policymakers got pretty nervous and they came in with a lot of rules and regulations at different levels of government and different levers to be pulled, try to calm things down. Here we are again. I know overall we're not talking about those kind of numbers, but in the 905, which if you don't live in this area is, you know, the suburbs around Toronto, detached home prices were up 37%. I mean, at some point, do policymakers get concerned about this round of heat?
Yeah, I mean, we would think they would, and I think that's the surprising thing. I mean, when we look at the GTA numbers as a whole, I mean, as you pointed out, they don't look very alarming because condos are pulling those prices down. And when we look at low-rise house prices in the burbs, you're right, they're surging over 30% this year. They've been pretty vocal that they're not concerned, and I think it's based on a flawed assumption. And they appear to be not concerned because they think that the majority of the demand we're seeing today is coming from end users rather than investors, and that alone is reason not to be concerned. But the reality is the acceleration we're seeing in prices this time around is actually far more rapid than in 2016. We went from single-digit price growth to over 30% in 8 months this year compared to 25 months last time.
It also strikes me too, John, that when you're working through the economic damage of a pandemic and real estate is performing this strongly, it would probably be surprising that policymakers would want to kill off the part of the economy that is actually working, that would trying to take any measures to cool it down. You know,
I think there's I think there's a tension there. Obviously, we don't want to kill the housing market, but you know, at what point are policymakers overstimulating it? I mean, certainly, you know, 30% price growth is not a positive thing. I mean, policymakers, obviously, their role is to mitigate the ups and downs of the business cycle, but when we're overstimulating, I mean, is it potentially just going to lead to problems down the road? You know, when we're bidding up house prices higher than they otherwise should be.
I'm taking a look, everyone, of course, always chiming in on real estate, and BMO putting out its charts and saying, well, you think Toronto's hot, others are boiling over. I thought, oh, which others? Barrie, Woodstock, Southern Georgian Bay. If you don't live in this region, it's not that they're not nice areas, but they're pretty far afield. It's surprising to see that kind of strength out that far as well. I mean, how sustainable is that longer term?
Yeah, I don't think, I mean, I think this is going to keep going on into 2021. Again, I think this big shift out of the city is a very big behavioral change, and I don't think that's going to stop all of a sudden. That's going to be going well into 2021, and if it stops, it might be the year after. And again, a lot of this is just, you know, a shock from COVID that's pushing people out of the city, combined with super low interest rates. That's getting people to jump into the market. So it's probably going to keep going on into till the end of the year.
Now, we do see, obviously, I mean, the people are trying to adapt to their lives, right? Working from home, particularly if there's two people working from home, 2 or 3 kids learning from home, you do feel the need for a little more space. But I guess there is some concern that real estate is a long At least it's always been for me, right? I don't move with the idea that I'm going to move again in a year or two. I pretty much want to stay where I am until I can't stay here anymore. Is there a danger too that when we finally get to that other end, to the reopening stage, where people want to be back in the city again, that you see a reversal of those fortunes, a reversal of the flow of capital back into the city?
Yeah, I mean, I think that's a huge concern. I mean, when we look at how, housing bubbles evolve, the reality is, the higher the rise, the harder they fall usually. If this keeps going on in the suburbs and we keep sort of seeing 30+% price growth as we go into the rest of the year, there is a risk that once things level off in the economy, once jobs open up downtown, that we may have bid up house prices in these really far outer suburbs far higher than they otherwise should be, and they could be a little bit more vulnerable in the year ahead.
So, John, you used the word bubble there, and obviously when you talk about bubbles, then people wonder about the bubble going burst, the catalyst for that. I think we just talked about one of them, if people do abandon the burbs back for the city again. What do you think the real dangers are there?
So, yeah, I mean, in terms of it bursting, I don't think it's anytime soon because there's so much stimulus in the economy right now. I think the real danger right now is we're starting to see people flipping houses in very short periods of time, like 6 to 9 months, making, selling for 20% more than their house when they purchased it for. And my concern, if this type of trend accelerates, which is a type of investor we haven't seen in some time, then these price gains start becoming self-fulfilling prophecies, and we end up bidding house prices far, far higher than they should be, which again leaves our entire housing market far more vulnerable than it should be if we didn't have all of this stimulus that's kind of driving prices forward.
All right, John, we always appreciate your insights. Look forward to more conversations as this transpires through the year.
Thanks for having me.
John Pasalis is the president of Realosophy.